Hello everyone, welcome to today's short webinar. In this webinar, I'm going to talk about how Congress have eliminated a very important deduction to a smaller limit and the tax impact that has caused to the taxpayer, meaning you. And there is a little known um, code section that we can use to bypass that limitation and get the full deduction and bring our tax bill down. I'm going to go straight to an example where I can show you how the Congress have limited the deduction and what we can do to get the entire full deduction. If you probably know that, let me share my screen. Let me share my screen. Um, I don't know if I'm sharing the right screen. Let me share the screen again. Okay. Um, I'm trying to keep this very simple and straightforward. So before the Congress had enacted these limitations, which happened in 2018, um, uh, this is how a tax return works. First of all the gross income is calculated, and then against that gross income, the taxpayer, meaning you and I, gets some deduction. And after deducting those deduction, we get a taxable income, which is this. And based on the tax bracket that we fall into, we get taxed on their income. I'm trying to keep it simple to drive the point. So in the gross income, we have different types of income that comes into play, like salaries and wages, interest and dividend, and income from S corporation or partnership. And there are various other income, but I'm just trying to keep it simple. So in this particular example, when the Congress had not limited the state tax deduction, that is prior to 2018 up to 2017. Say for example, you had a gross income from wages of about 100,000, about $2,000 in interest and dividend, and about 100,000 was flowing through from the S corporation or a partnership that you own. So your total income was about $202,000, and against that you have some deductions, and of course there are mortgage interest deductions, charitable contribution deductions, medical expense deduction. But I'm just keeping it this simple and straightforward to the state and property tax, state and local tax deduction. Okay, and I'll show you what Congress did to limit this deduction. For example, you had a $10,000 in state income tax that you pay, property tax about 10,000. So your total tax deduction for the state and local tax was about $20,000. So when you deduct this $20,000 from your gross income of 202,000, you go at a taxable income of 182,000. And say for example you were at 25% tax bracket, your tax bill is about $45,500. Okay, I'm taking very reasonable tax bracket. I'm taking very reasonable state income tax and property tax amount, which is very normal to have about $10,000 in property tax. Very reasonable to have about $10,000 in state income tax. And pretty much everyone who have a business will be at least in 25% or higher tax bracket. So this scenario can very well apply to you. Okay. Now let's see what Congress did. What they did is, effective 2018, they limited this total state and local tax cannot be more than $10,000. That includes all the taxes that you pay to the state government and the local government. So this is the effect. We are keeping the same $100,000 wages, interest about $2,000, and income from the S corporation or partnership about $100,000. So gross income is about $202,000, exactly what you had before the limitations. Okay. We have $10,000 state income tax, like before, and state $10,000 in property tax, like before. But you can only deduct up to $10,000. So instead of getting a $20,000 deduction, we are limited to $10,000 deduction. Because of the limitation, your taxable income went up by $10,000. So prior to 2018, your taxable income was $182,000, and now is $192,000. Again, we are keeping ourselves at the same tax bracket, 25%. So now your tax bill is not $45,500, is $48,000. All of a sudden, because of this one simple limitations that Congress put in of $10,000 total state and local tax deduction, you're paying additional $2,500 in tax. Okay. Now there is a small tax law that is available that we can use to avoid this additional tax. Okay, which is a very not too many people knows about this. So we can use that tax law, and what we can do is we can take this state income tax, that is the individual person's tax return responsibility, and shift it to the S corporation. We'll ask the S corporation to pay this $10,000, and now what happens is we keep the same wages, $100,000, interest about $2,000. Now, since we deducted the state income tax by the corporation, the S corporation or the partnership, the income that flows through to your personal tax return goes down by $10,000. So now only $90,000 flows through onto your personal tax return. Okay. So now your total income is $192,000. You see the difference? Before it was $202,000. Now it is less by $10,000 to $192,000. Why? Because we ask the S corporation to pay the state income tax that you are supposed to pay at your personal tax return. By shifting this state income tax to the S corporation income that flows through to you is reduced. And coming back, we are still subject to total tax $10,000 limitation. So we are only paying $10,000 deduction here, and our property tax is $10,000. So our taxable income because of this is $182,000, not $192,000. It's back to what it was before. By using this small legal loophole that we have available, we are bringing that tax deduction that was limited by the Congress back into our tax return, and we are bringing our taxable income back to what it was in 2017 and prior years. Again, we're keeping the tax bracket 25%. So now our tax that we have to pay is back to 45,000 prior to the 2018 limitation. So we just by shifting the state income tax responsibility to the pass-through entity, the S corporation, we saved $2,500 in tax. And we are back to what we used to pay in 2017 and earlier years. Okay. This is a little known tax loophole that we can use to bring your taxable income down and bring your tax down as much as possible. This is just one example. We have many, many more other ways and means to reduce the taxable income and the tax bill down to bare minimum. We believe in paying your fair share, but not a penny more. And we can do that for you. If you have any questions for this strategy, contact our office and we can implement the strategies for your tax return and bring your taxable income down and your tax bill down. Okay, so with that, I'm going to conclude today's webinar. In the next webinar, I'm going to talk about another limitations that Congress have put and how we can bypass that limitation and get the full deduction that bring our taxable income down and bring our tax bill down. So stay tuned in and log into this webinar next time. Very important. All these deductions, when you add up, can add up to sizable amount of tax savings that goes back into your pocket and not into Congress's hand. Okay. With that, I'm going to conclude today's webinar. Any questions, contact us, send us an email, call us. Thank you very much for attending today's webinar and see you for the next webinar.